We spoke in our first session about death being a certainty of life. Today, I will be speaking about the second certainty of life, tax. Unfortunately, both of these things are involved when it comes to dealing with probate and the administration of estates. I thought it would be useful to start off with some important general points to be aware of when it comes to inheritance tax. The standard rate of inheritance tax is 40%. However, this is subject to exemptions and reliefs, which we will speak about in the next slide. There is a reduced rate of inheritance tax of 36% rather than 40% when the deceased will leaves at least 10% of their estate to charity. What is inheritance tax paid on? Well, all of an estate, which includes property, personal possessions, and money, whether that's in the form of cash or investments. We spoke previously about the role of personal representatives. Paying inheritance tax is their responsibility, and failing to do so, or paying the incorrect amount, can result in penalties. I often get asked, when should inheritance tax be paid? Well, the answer to this is really as soon as possible. Inheritance tax must be paid by the end of the 6th month after the person's death. If the tax is not paid within this time frame, HMRC will start to charge interest. If there are no liquid assets with which to settle the inheritance tax liability, HMRC does, in certain circumstances, accept payment by instalments. In any case, the inheritance tax must be paid before you can apply for a grant of probate or letters of administration. If there is no inheritance tax to pay, the relevant form to fill out is the IHT 205 form. If there is inheritance tax to pay, the IHT 400 form must be completed and submitted to HMRC, along with payment of the outstanding tax. Once HMRC are satisfied, they will issue a document called the IHT 421, which the probate registry will need alongside any probate application. Talking about exemptions and allowances. The most important exemption from inheritance tax is spouse exemption. When someone dies leaving their estate to a spouse or civil partner, there will be no inheritance tax to pay. My head of department, Carrie Duncan, recently spoke about this in greater detail in the marriage video series, and that can be found on our website. Everyone should be aware of an allowance called the nil rate band, and that is currently £325,000, and everyone is entitled to it automatically. As long as someone who passed away, as long as their estate is within that nil rate band, there will be no inheritance tax to pay. There's also something called a residence nil rate band, and that is currently £175,000. However, this is only available in very specific circumstances, one of them being that the deceased owned residential property at the date of their death. And the other important point to note about that is that they have to leave property to direct descendants. One important thing to know about both the residence nil rate band and the nil rate band is that they are transferable between spouses. This means that when a second spouse dies, they can make use of their deceased spouse's nil rate bands, giving them potentially a tax-free allowance of £1 million. Anything above this will then be charged at the standard rate of 40%. There are other exemptions and reliefs which I have not touched on here. It is important for you to make the most out of them, and that is why it's important to instruct a solicitor who will be able to provide detailed guidance on tax issues. In this way, we can help to maximize the residuary estate for the residuary beneficiaries of the estate. If you need any guidance, please contact us and we'll be able to help.